So what is one measure someone can use that is pretty popular in being able to determine fear in the stock market? What's going on, team? It's Ricky with TechBud Solutions. I'm going to keep this video super short and sweet, and I hope that if you learned something new within this video, I earn your thumbs up. So I'm going to start sharing my screen so you can see exactly what it is that I'm looking at. And this is /NQ. I made a very similar video to this about 2 days ago, and it's because the overall market, NASDAQ market, hit all-time highs, or at least 180-day highs at 13,423, meaning that the market is very overbought. You can see with the RSI, with the MACD, but again, you never want to rely on these indicators to be able to determine, is the market about to pull back? And again, there's a big difference from a market pullback and a market crash. So before all you negative Nancy's in the comments section get triggered because someone says the market's going to crash, at the end of the day, no one knows when the market is going to crash. But what you can do is simply prepare for a pullback. And a pullback is not a bad thing. It's, if anything, healthy for both long-term investors and traders, especially if you prepare for it. It can be extremely profitable. And it's very simple. It's asking the question, what's the difference from a pullback and a crash? Well, a crash is very similar to what we saw in the very early of 2020 when we were going through the midst of the pandemic and the market aggressively sold off. And that crash is something that I think instilled a lot of fear in people and prepping for the next one. A pullback is something that we literally experience almost every 2 months with the overall market. And you can see that every single time that it hits almost all-time highs, it pulls on back to the SMA line. Hits all-time highs, pulls on back. Hits all-time highs, it pulls on back. Hits all-time highs, it pulls on back. Hits all-time highs. So now you get the point of why people are talking about a pullback or a potential pullback, not a crash. So again, don't get triggered that someone's trying to predict the crash. No one's trying to predict anything. But what is one measure that is very common for a lot of investors to be able to determine volatility or fear? And that measure is viewed as ticker symbol VIX. This is something that takes into consideration overall market volatility. And you can see that during the midst of the pandemic, VIX goes up because there's a lot of volatility, a lot of fear. You can see that it hit all-time highs. But as it began to condition that it could recover from the overall lows of what we were experiencing, we began to see VIX slowly flatline right around $20 a share. So what does this tell us as of right now? There's very little volatility going on in the market right now, so therefore there's very little fear. And does this mean that the market is not going to pull back at all? Well, no, it just means that, again, current investors are more conditioned, especially with how tech stocks are performing, to be able to tolerate the current levels of the market. And why, again, can VIX be very useful for either long-term investors or even traders in general? Because the VIX goes up when there tends to be an increase of volatility, and there tends to be an increase of volatility when there's more fear instilled in the market. So if you begin to add VIX to your watch list and then you begin to see that VIX begins to go up, that is most likely because we are experiencing more volatility, which can therefore foreshadow a potential pullback or a potential, again, crash once that volatility comes in place. So what I want to talk about is, how is it that someone that is currently getting started be able to invest in the market right now without the fear of completely losing everything if the market were to pull back and crash? Again, with a very simple reminder that no one knows when the market is going to crash. No one can predict that. But what you can anticipate are these little pullbacks. And what you can do is set your future self up for success. And what that means is, instead of putting your money in any stock that catches your attention or that you read about in a chat room platform that everyone else is trying to hype up, actually, during these levels when we're super overbought and people are talking about a potential crash or pullback, instead of throwing your money at everything as you're just learning how to invest or trade, why not be extremely particular on where you choose to invest your hard-earned money and make sure that these are companies that you would not mind holding for the next 10 to 15 years. So regardless if the market does pull back a little bit, or regardless if the market does crash, these companies are such amazing companies that over a long period of time, a simple pullback within the next 6 months to a year isn't something that's going to devastate you big picture in that 10 to 15 year mark. A very simple question you might have is, does that mean that I should go all in into these quality companies that I want to invest in for the next 10 to 15 years? You know, like we've said so many times before, there's so many different ways on how to approach the stock market and still get that same end result of making a profit. There's not one way of doing things. Because we are at these overbought levels levels, regardless of what anyone says, you can see it yourself that the market does pull back once it reaches these highs. We're not saying that it's going to crash, but looking at these levels, it would make sense that it would begin to pull back. And as we are at these overbought levels, if you see value in certain stocks, I do agree. It makes sense on why you're buying them and why you're investing in them, especially if you plan to hold for the next 10 to 15 years. But you want to be prepared versus being surprised. So instead of, let's say you have $10,000 in your account, instead of going in at a full investment of $10,000 to buy right now and not anticipating a pullback, maybe at least have some money in the reserves, meaning that you leave yourself some extra buying power. So instead of using the full $10,000, maybe you use $7,000, maybe you use $5,000 to be able to have enough buying power that if we do experience a pullback, or we do experience a crash, regardless if your intention is to trade it or to invest in it for the next 10 to 15 years, you can at least buy at the lower levels. So it's, again, setting your future self up for success by understanding the current levels that we are right now with the overall market, understanding the current conditions that we are experiencing, and that it wouldn't be much of a surprise if it does pull back. But like we said, no one can predict the future. And based off of the VIX as of right now, there is not a lot of volatility. So it makes sense on why you want to get some skin in the game for those long-term plays, but also be prepared for a pullback by allowing or giving yourself enough buying power that you can buy them at the lower levels. And I think that's kind of the best of both worlds. One of the things that I'm personally doing is I'm reducing my position size on these current levels as of right now, as we're very overbought, preparing for a pullback, but just in case it continues to uptrend, then guess what? I still have some skin in the game so I can benefit from that overall bullish movement. But if it were to pull back, my position size isn't so much that I'd be devastated, and I have enough buying power left over that I can buy more at the lower levels and ride that recovery because I know I'm putting my money in quality stocks. The last thing that I want to talk about is during this time where there's so much uncertainty, and especially during earnings report, is I'm building my watch list on stocks that are very oversold, meaning that instead of throwing my money at just everything just because they recently pulled back, and again, a very good example can be like ticker symbol AA that sold off more than 28%. It doesn't mean that just because something is oversold that it's a good deal right now. And again, this is just an example, right? It means that this thing can continue to sell off. But what I'm doing right now is I'm building an oversold watch list. So as and if the market does pull back and all these stocks continue to pull back, I can allocate them within a structured format. And once they begin to indicate signs of an uptrend with the alerts that I have set up, I can then begin to slowly ease into those positions and ride the recovery back up. And I think that's the beautiful thing about setting your future self up, is you don't just have to go all in on the current stocks that are thriving, but also have some money allocated on the side in which that you can utilize when these good deals present themselves and once that proper confirmation of the reversal is confirmed. Let me know in the comment section what you guys think. If there's any stock that you are watching or that you are waiting for to pull back, comment that down below. And as well as for our long-term investors, as not everyone trades in the market, what is it that you plan to hold for the next 10 to 15 years? And do you and are you giving yourself enough buying power that if it does pull back, because again, you can't be closed-minded and think that it's never going to pull back, do you have enough money allocated, saved on the side that you can buy at those lower levels? What are you doing today to set your future self up for success? That's what I want to leave you guys with. So I really hope that you guys enjoyed this video. Don't forget to check out the VIX, which people call the VIX, to learn a little bit more about market volatility and how to anticipate fear in the overall stock market. If we answered your question in this video, I hope that you can consider dropping a thumbs up. Don't forget to join our free Facebook group. We run the largest free Facebook group in the world for those who trade in the stock market with over 298,000 members. And that is that first link down below. If you guys want to watch me trade live as soon as Monday at market open, I'd love to have you join us. That's that second link down below, and I'll see you at market open. Until then, like always, let's make sure that we end the year on a green note. Take it easy, team.